What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 12th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend a brief amount of time to discuss why I not only believe the fundamentals are extremely strong in crypto markets, but also that the price action and data is signaling that we're set up for yet again another bull market in the cryptocurrency space, and why now is the perfect time to be paying attention. All right, so we're going to be doing a whole broad market analysis right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone. So for many of you out there who are watching the video, it's probably pretty obvious over the last 24 to 48 hours, their crypto markets have been moving up quite extensively. If you take a look at CoinMarketCap or TradingView, you just have to simply look across the board in the market, and you'll see that not only the vast majority of cryptocurrencies are in the green, many of which are outpacing Bitcoin, but many are pressing double-digit territory, if not triple-digit territory, continuing to rally to new levels that we haven't seen in a very long time. So now I want to go ahead and look a little bit deeper than this. Of course, it's great to see the market generally moving up, but I think there's a much bigger story to all of this to understand, and it's a lot of things kind of mixed into the perfect cocktail to lead to another bull run in cryptocurrencies. So let's go ahead and try to understand this on a little bit of a deeper level. Well, first off, on a kind of macro level for Bitcoin, there's probably nothing more significant than the upcoming supply shock that's going to hit Bitcoin. And again, as we've stressed here on the channel, guys, I think many of you have probably heard me talk about this before, but I want to make it very clear that the halving is likely not priced in to Bitcoin. There's a big reason for this, because as much as we're attentive to this, and maybe as there's more people coming in, there's a little bit more awareness, the vast majority of the broad cryptocurrency space does not understand or know about the halving event, nor does the overall world economy, as many people don't own Bitcoin or understand the fundamentals to a T. So that's very important to understand here how much of a kind of anomaly or minority we are in the sense of the broader world economy. So if we have this vision of Bitcoin becoming a global store of value, and we're talking about an asset that's sitting around, give or take around $200 billion, we've got a long way to go here in the sense of actually seeing this materialize into a multi-trillion-dollar asset. But the halving event is going to play a very big role in causing the supply shock that will inevitably lead us on the next parabolic cycle. And this is what happened the last two times we had halving events for Bitcoin, from when we went from around $4 at the halving in the first cycle upwards towards $220, or in the last cycle as well when we were at $600 during the last halving, or $700 in the last halving event, upwards towards $20,000. It's a three-step process to understand here, and we'll talk a little bit as we look at the data science models in a bit, that there's really three steps here. Right? We basically have, in this case, the accumulation phase. We have the halving event, in this case, that sets the supply shock. And then afterwards, we have the hype cycle that comes in. We have people who buy in off the price speculation that leads to these parabolic cycles where, because of the supply shock, the reduction in available supply, and the increase in demand, you have this instant parabolic rise in the asset's price, in this case, Bitcoin. And this happens across the board in any kind of supply shock in any kind of asset class. The cool thing about Bitcoin is that it's guaranteed here, but most people, again, do not understand this, right? So just important to take into mind. Now, this is not only good in the sense, in the sense of having the halving event, but we also have central banks that are applying pressure. Not only in the fact that they've been extensively adding to their balance sheets, the Fed has really led the way here after leading the way in reducing its balance sheet. It's come back to play catch up, and other central banks are going to take upon this opportunity. We've seen that the overall total assets of the four major central banks, from the People's Bank of China to the Bank of Japan, the ECB, and the Fed, are now on average adding. In fact, it's been about $1 trillion of liquidity added in the last year. So we've not only got this pressure from central banks with more funny money coming into the economy with the meddling and repo markets from the Fed, but along with that, we have a big piece of news coming out of the Federal Reserve. Fed Chairman Jay Powell came out stating that the Federal Reserve is extensively exploring the development of a form of digital currency. Now, bear in mind, I think we can all agree that this is not going to be, as we would define a cryptocurrency, something that's completely censorship resistant, that has no central authoritators, right? I think in this case, we're going to see something that's much more controlled. But I will say, what's very interesting to see is that Jerome Powell is stating that this supposedly is going to be in favor of private transactions. Now, again, this might just be his opinion on it, or it might be a select few opinions from the Fed. And again, at the end of the day, I probably am not going, if I'm holding anything in cryptocurrencies, I'm not going to be allocating my crypto capital into a Fed stablecoin in this case, right? Because it's A, it's a stablecoin, and B, even though it might be private, if there is any kind of centralized aspect in that case, I'm not very interested in trusting a large amount of my capital. And it may be my savings in my savings account, but again, I don't think I'm going to be getting much interest on it, right? Anyways, long story short, putting this aside, taking the quote that he stated is very, very important. So let's just go ahead and understand. So he specifically said a ledger where you know everybody's payments is not something that would be particularly attractive in the context of the US. Very important to hear here. So I like the idea that he might be, alluding to the fact that if they do have a stablecoin of some sort, it might include ZK snarks, it might include ring signatures, a lot of the encryption technology that we're used to with a lot of plays like Monero and Zcash. But putting that aside, right? This just generally means that central banks are starting to take notes here. They know that they cannot push off the context of cryptocurrencies for a long time. They've simply just kept under the shadows for a long time in the sense of what's been discussed at the Bank of International Settlements, what's been talked between the ECB, the Bank of England, the People's Bank of China, and the Fed. For too long, it has been in the shadows, and now finally discussions are starting to surface because eventually they've got to talk about what they're aiming to innovate on, what they're aiming to build. So it's interesting to see as federal regulators censored Libra from developing a consortium cryptocurrency that was permissioned and ran by permissioned actors, a variety of different corporations who conglomerate together to create the Libra. In this case, we're now seeing central banks on a rush to make digital currencies, as China really led the way back a couple of months ago in October. Now, I want to go ahead here. We've obviously got some fundamental developments in the sense of the excitement around the broader digital asset space, but the data science models for Bitcoin as well are pointing towards a lot of excitement. So this is the MV/RV Z-score, which takes market cap versus realized cap, and realized cap is basically the price in which a Bitcoin was last spent, and it's taking the entire supply and taking that overall realized cap, and it's subtracting it here in this data science model from market cap. Right? And you can read in a little bit deeper into this, guys, but again, just trying to analyze it here from what we've seen in the past here. We luckily have a chart here in price, and we also see that as price increases, the MV/RV Z-score increases over time. We can see here that we had the standard correction that we've had the last two times before we ended up having a parabolic rise in price. And now we've kickstarted here. We had visited back down here during the accumulation phase exactly where we needed to be. So the data science models yet again proving we're ready for the next upswing. Next up as well, the Powell multiple, okay? So the Powell multiple here takes a look at daily coin issuance in the form of USD. So how much Bitcoin is coming out and what is the US dollar value of that Bitcoin on a daily distribution, and dividing that by the 365-day average of daily coin issuance in USD. So as this number is going up, this means that the daily amount of Bitcoin being issued is an X amount higher than it was over the 365-day average. So it's a ratio in this case. So it's a multiple, right? So we can see here that we have a very similar top range here after we exit out of the accumulation phase, which again has very similar bottom periods around here at 0.3. And we can now see, now that we've corrected back down to a historical support level, we're now coming up for the next rally. We're finalizing the continuation of the rally we started from 3,000 to 14,000. After the correction back down to the upper $6,000 range, we're now ready to kick it up more. We're kicking up momentum, and we're ready for higher levels on price to not only revisit back to 14K as well as 20,000 at the previous highs back here from December of 2017, but along with that to hopefully hit new parabolic highs when the momentum really kicks in and the retail wave as well as institutional wave comes in. Next up, we've also got the stock to flow model, probably the most well-known and prominent model in the cryptocurrency space. Starting to kick up here on the upper hand side here, very similar to a little bit of the front run we had going into the halving event. In this case, I think the level that we're going to be going for on a very reasonable note is 12,000. I think 12,000 is not only fair in the sense of the stock to flow model, but also if we take a look at the chart later on in the sense of Bitcoin's price, it's really the next resistance mark, taking in the last two highs from the December highs of 2017 as well as the highs at 14K if you're looking at the logarithmic chart, which is where most investors are looking. So again, right exactly where we should be here, riding around similar to like we did back here in the last cycle. And outside of that as well, we've also got the 2-year multiplier, in this case the 2-year MA multiplier, which basically takes the 2-year moving average, which is this green line here. So it's taking the close over the last 2 years and averaging it out into a weighted line, but also a 5x multiple on the 2-year, basically the 2-year moving average multiple. So this very simple indicator gives us a good idea when we're in the accumulation phase, when markets are oversold, and also when markets are overbought, right? And right now, we did exactly what we did in the last cycle. We came into this phase where we went below the 2-year multiplier, similar to how we did over here. And we also came up above there and made it support, just like we did over here, right? So now we're riding up and we're starting off to the next cycle. Very simple here, probably one of the clearest indicators. Another thing as well to look at is taking a look at the 200-week moving average. So the 200-week moving average heat map demonstrates a few things. It shows us the 200-week moving average, which we made contact and support with, just like we did back here in the last cycle during the accumulation phase. But along with that, showcases to us as well the percentage of monthly increase over the 200-week moving average. So in this case, it's basically demonstrating how fast the 200-week moving average is moving over a monthly basis. And if the color is getting larger in this case, like it does here on the uptrends in the cycle, when we start to reach parabolic levels, then in that case, it showcases that we're kicking into a bull market. So the warmer these colors get, as you can see here along the heat map, this means that we're moving faster and faster. And you can start to see we're doing exactly what we did back here, where the dotted shades start to get a little bit more brighter from this kind of dark blue. So again, we're on pace as expected. Now, one last thing to look at before we take a look at our bonus data science model is the logarithmic growth curves. I think the thing that's important to understand here is that Bitcoin on its logarithmic chart has been flowing through this channel ever since it started. And one thing to take into mind here is the oscillator. If we're taking a look at a gauge of historical price, guys, we can see here that we are on the lower end here, right? When the oscillator reaches towards the peaks, this is when it's usually time to start preparing for some profit taking or maybe be expecting of some kind of correction of Bitcoin's price. But if we come down here towards the lower band of the oscillator, we can see here that this is the lower part of the channel here. We don't tend to find Bitcoin correcting much further once the oscillator levels are quite low. So this is, again, I think one of the most simple but important charts to look at. And last but not least, days of profitability. You know, with all the volatility, with all the craziness, with us, to be fair, back at $6,900 to $7,000 just a matter of a month or two ago, you know, profitability for Bitcoin sitting at 96% now. This is why it is so imperative, guys, if you get involved in cryptocurrency markets this early on, this new emerging asset class, that your perspective is not on the daily time frame, that you don't care when Bitcoin either increases or decreases $1,000, because it just happens. It's gonna happen, and it's gonna happen multiple times from here on out until Bitcoin becomes a world reserve store of value. Plain and simple, it's an emerging asset class. And if we focus on the broader term trend here, the higher lows and the higher highs, we can see that Bitcoin on an annual basis is building up to be more and more of a store of value. It's becoming more and more of a valuable asset. And at a $200 to $250 billion valuation, it's a blip compared to the $30 to $50 trillion in valuation for U.S. equities. And not to count the other trillions of dollars of equities across the world in other global markets, the trillions of dollars propped up in property markets, and not to mention all of the money in fixed income markets, many of which are negative yielding bonds that amount to trillions of dollars of valuation that are having a negative yield. Bitcoin doesn't provide a negative yield. In fact, it provides a lot of growth potential in the sense of its base price because of its fixed monetary policy. And as we talked about, with all of the sorry, I was about to say a potty word, with all of the negative types of activities that central banks are taking on in the sense of monetary policy, Bitcoin having a fixed monetary policy, a reduced inflation rate over time, eventually reaching a finite cap at 21 million coins, also factoring in the fact that we've got a lot of lost coins, positions ourselves very well. But this isn't it, guys, right? I mean, we're looking at the data science. We're looking, obviously, at the general kind of market price action. But there's also a fundamental story to tell here. There's not only been a lot of developments with Bitcoin in the sense of better wallets, the Lightning Network, but also with the Ethereum network, right? We're not only just talking about Bitcoin here, we're talking about the altcoin space, and we're talking about other players in the crypto space that have actually done some really unique things. And I can't think of a better play here than Ethereum if we're talking about the large caps. Ethereum has continued to see a lockup in what's known as the DeFi space, so the decentralized finance space. And as I've probably hinted before, as you guys probably might know, the DeFi space is kind of an emergent trend of decentralized exchanges, decentralized financial services, lending platforms, decentralized and censorship-resistant stablecoins. There's so many unique functions and projects that are being built that are aggregated under this umbrella of the DeFi space. And most of it's being built on Ethereum. It's being built on some other protocols as well, but most of it is coming from Ethereum. And it's really built a value proposition for Ethereum, as over 3% of the entire Ethereum supply is now locked on the DeFi platform. If we take a look at it in the sense of USD terms, we've seen this thing start to go parabolic because the excitement has been going around Ethereum, and Ethereum's price has been reflecting that. So as we start to really gain here, we smash the $1 billion mark here. I think we're very much on pace for this year to reach 5 or 7 billion for the DeFi space at a minimum. I have much more optimistic figures, but to keep rational, I think 5 to 7 billion would be very easy because of not only an increase in Ethereum's price, but also the developments of the DeFi space. Even though we're already into February here for this year, I think we've got a long way to go here for DeFi, and I think it's just going to get more and more exponential as time progresses and as more and more applications get built. So what are some of those applications, right? It's one thing for me to just kind of say on the surface that DeFi is exciting, but I don't want to leave you guys sitting there. I want to go ahead and actually talk a little bit about some of the cool technology. Compound, for example, is an example of a lending pool where you can lend out your cryptocurrency assets not to a centralized custodian, but to a smart contract on the Ethereum blockchain that pays out adjustable rates of interest on your crypto capital. And the cool thing about this is that you can also borrow as well. So this is mainly used for people who are maybe margin traders or need to, for example, take out a cash-based loan in this case or credit in the short term, and they don't want to liquidate their cryptocurrency assets, and they're willing to use it as collateral. There's a lot of different use cases for this, but Compound is one of many lending pools that have done this, where you can dive into the application and you can connect your cryptocurrency wallet and actually see real time what kind of interest rate you can either pay on the borrowing side or you'll pay on the supply side. It's very fascinating. Earning up to 5 to 7% interest on your dollars is absolutely fascinating, and they do it through a very clean user experience. MakerDAO, for example, with their innovation on DAI. Now there's multi-collateral DAI, where your DAI stablecoin, for those of you who may not know, DAI is a censorship-resistant stablecoin on the Ethereum blockchain that's generated by locking up your Ethereum and other assets as collateral. And now you can basically use a variety of different cryptocurrencies as collateral now, and use DAI as a stablecoin to transact in dollar terms. Outside of that as well, Kyber Network. We've been following Kyber since back in November 2017. Some people went away after the first bull market. Others build. Kyber Network has been continuing to kill it. Like other decentralized exchanges, Kyber Network has not only provided the ability to make swaps, and they also have Kyber Swap, which allows you to simply interact with MetaMask or other wallets that you might have in the crypto space to make truly decentralized trades. But along with that as well, Kyber is aiming to build a DAO. They're trying to aim to build a decentralized autonomous organization. It's providing the ability to have a decentralized governance over the Kyber Network protocol, as it aims to be the base liquidity layer for the entire DeFi or decentralized exchange space, which is extremely exciting, and I'm happy to see that they've come a long way in doing so. Another one as well, Uniswap. project made by one individual coming out and building what many projects tried to raise tens of millions of dollars to do and tried to build and failed at building compared to Uniswap. Uniswap killed it, and they built a really solid way to not only bring liquidity in, but also be able to build a decentralized exchange where you can swap out cryptos, where you can pull crypto together and be able to provide this kind of decentralized exchange service. Again, another solid player here. In the sense of enterprise, and still in the case of DeFi, Chainlink, being able to plug into a variety of data sources and APIs and real-world price feeds to be able to build and utilize really unique use cases for smart contracts, to be able to plug into the real world and make it so that the Ethereum blockchain can communicate with the real world. This has been a huge setback for smart contract adoption that Chainlink is finally fixing. So I'm very excited to see this. And then also Unibright, which we've talked about. Unibright coming in and providing the ability to not only have easy smart contract development in the Unibright framework, but also with the free equity platform that's going to help people to develop security tokens, as well as meet all the compliance and regulatory needs, as well as the needs of enterprise companies. There's so much at stake here. No pun intended, with Ethereum now moving over to the staking mechanism in the next couple of months. But you guys get my point here. There's so much developed on the Ethereum blockchain as of recent that's finally coming into fruition, and people are starting to realize it. Enterprise is starting to pick up. People are starting to realize the potential of DeFi and how it's going to shake up our perspective of not only cryptocurrencies, but the broader world of finance. And that's what gets me really excited. And don't take my word for it. Simply take a look here at the price for Ethereum. We talked yesterday about a potential breakout here on Ethereum getting above this previous line of resistance. And now I think it's safe to say, guys, with the double bottom we had here on this very significant line of both resistance and historical resistance and support, we're now set up here for a full swing. Ethereum's picking up momentum. The SMS indicator we have here is flicking on the weekly to the upside. It's giving all 5 points here. The momentum has set in. And if we've learned anything from history, we do not try to bet against cryptocurrencies when the momentum kicks in. In fact, if anything, I get bullish. I get excited here. Not to mention, we are far down from the previous highs here compared to Bitcoin. For example, Tether chart here, if you want to take a look in terms of USD, breaking out here on the logarithmic chart on a long-term line of resistance and support. We are well beyond where resistance was, guys. It's very clear here we've broken it. Confidence is reigning in on cryptocurrency markets. And it's not just in Ethereum, but it's obviously in Bitcoin as well. I mean, honestly, if we just take a look here, guys, we looked at the data science model earlier. This really puts it into perspective. Just taking a step back, not looking at the daily, not looking at the hourly, and God forbid looking at the minute chart. Don't worry about that. Look at the long-term chart here. We're setting up for the next cycle. So it's really a matter here of time frames and also your risk profile as well, right? My profile here is not only for the broader cycle here to see Bitcoin hopefully reach up towards 100,000 sometime in 2021, but along with that as well, to watch Bitcoin dominance and how we are not only exposed right now into altcoins, but keeping up in which altcoins are outpacing Bitcoin. We've been talking ever since back here in August and September. Again, I'll be honest, guys, there's not many things that I tend to kind of be braggadocious about, but I will say I was very, very confident back in August and September that we were going to see a serious point decline here. And many people didn't agree with me. Many people criticized me for it. And now we're down nearly 10% from our peak here for Bitcoin. And it looks very well like we're coming down here to 60 points if we're taking a look at the chart. So it just seems as if we had a delayed response here compared to my previous prediction back here again since back in August and September. So it's nice to see here. It's good to see risk taking is coming a little bit early into markets. Definitely different comparative to the previous cycles we had in crypto markets. But it's coming in a lot of the plays that we've been watching. Again, if we take a look across the board here, Kyber Network, one of them, doing very well here, pressing up against its resistance here, building an ascending triangle, a huge bullish pattern. Outside of that as well, we also have Chainlink. Chainlink breaking above 40,000 sats, making it very clear here that it's not sticking around. It's going to keep charging forward, and that we've finally broken out of the ascending triangle. Outside of that as well, Ravencoin picking up momentum here, continuing to set higher lows here on the longer term chart, and hopefully if it can get above this resistance range around 450, really kicking in for momentum. And then outside of that as well, I think we also had one more that I wanted to discuss. Oh, basic attention token. I don't know why it's not here on my list. Oh, there it is, BAT BTC. I guess I'm blind. We can see here again, BAT soaring higher. Again, testing back towards this resistance range. If we get above there, I think we're heading straight for our first resistance mark at a little bit above 5,000 Satoshis. So a lot of momentum plays coming in here, not only in the large caps, but in the small plays and mid cap plays. And this is what we want to see. We want to see broad confidence across the cryptocurrency space. Now, one thing I wanted to propose here, an interesting chart, just to keep in mind here. When we're talking about Bitcoin here, I think in the broader trend, a lot of people might be curious as to whether or not we're going to get a front run on the halving event. Even though the whole world doesn't know about the halving event, we may very well get a little bit of a front running here where there is some optimism coming into the halving event as it becomes more and more prevalent and as more and more people come in. This has happened previously in the past, but it didn't happen in the last cycle so much. So the question here is whether or not, though, we can take any lessons from Litecoin. So this individual, Little Kimmy, actually put a really interesting chart here, probably one of the best ones I've seen on TradingView in a while, that basically compared the front run here on the Litecoin halving event from 28, 30 bucks all the way up here to 150. And how after the halving event, we really actually started to see a deduction in price. So could it be that we get a little bit of a parabolic run here to somewhere like 15K ahead of time? I think this is something to keep in mind here, and bearing in mind as well that if we do have something like that, that'll likely follow with a correction. Very fair point here. Honestly, again, I don't think this is the likely scenario, but I thought it would be very good just as, again, as a kind of a perspective, outside of my window of thought to provide this chart. I thought it was a really interesting one I saw in TradingView. And to bear in mind, if we do get this front run, I'm going to be taking some partial shares and waiting for a pullback to add into my Bitcoin positions. But again, we'll see what happens here. Again, if we get this front run to the halving event, I would definitely, at least in my perspective, I know I'm going to be taking some positions and definitely be taking some profits and then averaging back in when we get a pullback of some sort, because that will be too much, too quick in my opinion. But long story short here, guys, let's talk about the broader perspective. What's going to support and supplement the kind of buy side action in cryptocurrencies? You need capital for it. You need money. Where are the inflows going to come from? Well, we got to get outflows from somewhere else, and I think it's coming from equity markets. We are nearing a double of the .com valuation for the NASDAQ. At 5,000, this is where we peaked out. We're about to peak out at 10K again. An absolute doubling on an already hyper valuation here for tech companies back in the late 1990s to the early 2000s. There may very well be a chance that the NASDAQ continues to rally beyond 10K. I won't say that it's guaranteed resistance, but when you talk about this starting to go up in a lot, like just basically a straight up exponential fashion, you got to ask yourself, after the longest economic expansion in history, after one of the largest rallies for the NASDAQ and the broader equity market, you have to ask yourself, is the risk to reward favorable? That's all you have to ask yourself. I'm not going to determine for you guys what you have to have your money in, where you should have your money in, because you and I might have very different risk to reward profiles. We might have very different understandings of markets in the sense of where we're interested in, what areas we're better suited in the sense of knowledge of what markets we're investing in. You have to determine that for yourself. But I can tell you, I'm not positioned in any sizable amount of equities. I'm not positioned in, I'm very interested in building some positions in commodities this year, like gold and silver, but I'm very well heavily invested in cryptocurrencies because I see the exponential potential in this space. That there is a big chance, even though there's some risk, there is a chance for this space to start moving much higher over the next coming years. And I hope in this case that you guys, if not invested, or if you are invested, I hope no matter what, you're in the ride with me and keeping in this journey. And if you guys like this video, drop a like. I always appreciate it. If you want to leave a comment on anything that we talked about or something that we might have missed, or just if you have anything to say, please leave a comment down below. Let me know what your thoughts are, guys. But until the next video, again, guys, it's always a privilege to be here with you all. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.